Accunet Mortgage is an equal housing lender. NMLSConsumerAccess.org, number 255368. Welcome to the Accunet Mortgage and Realty Show, giving you inside information on buying, selling, and financing your home. Welcome to this week's podcast of the Accunet Mortgage and Realty Show. I'm Brian Wickert, licensed real estate broker with Accunet Realty Advisors, and also the majority owner of Accunet Mortgage, where my NMLS ID number is 259610. Here again today with my son, David Wickert, who's president of Accunet Mortgage, and his individual NMLS ID number is 328847. So here we are on Friday, September 5th, and we got the much-awaited job situation report for the month of August. And David, what happened to non-farm payrolls?
In the month of August, America, added 22,000 jobs to the economy at first draft.
On the first kick
cut,
of the can, yeah.
22,000 jobs. That was expectation, which again, like, who comes up with expectations? It must be a survey of economists. We're expecting more of like 75,000.
Yeah. The average expectation of all the economists was 75,000 new jobs were expected. So this was a disappointing number. And was that good or bad for mortgage rates, David?
That was good for mortgage rates.
That's
as
right.
Rates came down a pinch. And in fact, it's been a combination of things. But before I get to that, just the other piece, or what added to the momentum of an improvement in rates, was not just the August number, but then also it's in the last paragraph of the release from the Bureau of Labor Statistics that in June was revised further. It was 14,000 positive, but is now negative 13,000 in June.
Okay.
And then July was revised up somehow.
6,000 was it?
So from 6,000 more jobs.
So
again, how real is this August jobs report?
It's the best
barely real.
No, it's the best we have. It's an indication. And it was the big revision.
That's a good word. It's an indication.
It's an indication. And all that matters to us.
But this is like if we had baseball games and we said, hey, what was the score after the second inning? It's like, well that's not the final score.
No, but there's reality, because we did see rates improve.
Yes.
Here today after the news came out.
Yes.
And so right now on a $300,000 30-year fixed rate to buy a owner-occupied home, with all the other right stuff, great credit, no second mortgage, yada, 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 we're looking at a couple of options. You could either do 6.125. That's a lot lower than it has been. And your loan cost would be, about $1,900 all in.
Okay.
And that gives you an APR of 6.17. I think that's going to be a popular option. You can now get 599 on a 30-year fixed rate. It would cost you $2,995. In points, you'd be paying about a half a point to get that rate.
On a 30-year.
On a 30-year fixed rate. That's
amazing.
Kind of crazy.
Okay, you're right.
You know what? It's a little bit more than that. I'm going to revise my number, but close enough.
It's within reach. It's all loan-specific, credit score-specific scenario. But, Dad, as I like to comment, at 7:35 a.m., how many texts did I get? How many calls did I get on Friday from home shoppers being like,
hey, I heard rates went down.
Hey, I watched Rick at 7:30 on CNBC, and boy, that weak jobs report. It's just regular.
Right. So this is going to be a welcome.
The plumbers of Milwaukee and the teachers of Milwaukee aren't. It's nice.
Yeah.
It's a windfall.
We'll take it. But where it does matter is for refinancing.
Yes.
And so we've been reaching out to clients and letting them know, hey, you got some savings here. I had a call from a past client up in the Green Bay area, and he was currently on a 6.875 adjustable rate mortgage that we did not provide to him. He had to get a mortgage on kind of an emergency basis a year and a half ago. And so he said, okay, so, I want to do something with this. And so at the time, this was like 2 or 3 days ago, before the improvement in rates, I was able to give him like 6.375. It could lower it a half a point. And he's got like a $500,000 mortgage. So I could save him $210 a month at then a cost of $786. I'm pretty sure that's going to be a zero cost now when I redo the numbers and mail it to him. But he was like, I was really thinking I needed to wait until rates came down a whole percent, which is...
I have had some of those conversations, and I can't.
Right. It's like, well, why? Well, just because I thought that was what I should do. Well, that's based on the idea that it's going to cost you a lot of money to refi.
Yes.
That in order to make the cost of the refi worthwhile, you need to have this big savings. Well, he's got a pretty big mortgage. And, now I'm going to be able to reach out to him today and say, hey, you know what? I can save you that $210, and it's not going to cost you anything.
Yes.
And
it's going to cost you e-sign. Is all it'll cost you.
And, the thing that I pointed out is that every month you wait, you're wasting $210.
Yes. Why would you voluntarily be paying more?
So if you're going to, wait 6 months for, rates to come down a little farther, okay, now you got to make up that $1,200 of lost savings on top of everything else. I hope I got through to him. And so I'm hoping that now when I give him that, but, who knows? And what else are you seeing on the refi trend?
Well, what's interesting, because now I've got home shoppers in process to get to the closing table to buy a home, and I have refinance clients who I don't want to call it a victory lap, Dad, but ever since rates peaked October of 2023, I know this because it was 8%,
right, a little over 8,
and since that time. The conversation that we consistently have with clients is I ask, hey, a year from now, do you think rates will be higher, lower, or the same? And not because I'm worth billions of dollars, but as I pose it to clients, consistently the answer has been, I think they'll be lower. And so it's not a victory lap, but I've enjoyed with some of these clients who are refinancing now. It's like, hey, remember that thing we said to each other X number of months a year ago, 18 months ago? Turns out it was true. Thank God we didn't spend the money back when you bought the home, because you told me, hey, I think I'm going to trade this thing in, and lo and behold, we are. But on a refinance client, it's a similar, by the way, conversation,
process,
right? As you just noted, okay, do you want a low-cost refinance option, or you can pay points? Rates are like hotel rooms. You want that low rate? You want to be in the presidential suite of rates?
Yeah.
I'll give it to you. But the only reason you would do that even on a refinance is if your thesis was, I think that this on the refinance is the lowest rate that I'm going to see for quite some time.
Yeah, which who knows? By the way, when I last checked, this is the other important thing for people to remember is, okay, so there's now a 99% chance that the Fed is going to cut their one overnight rate that banks charge each other by a quarter point on September 17th.
Yes.
There's like a 63% chance of another 0.25% cut in late October, and a 57% chance for a third quarter point rate cut in December. All that is already baked into today's mortgage rates. You do not have to wait for the Fed to act on the 17th. I saw somebody talking about, well, maybe they're going to cut rates a half. That is not showing up in any of the Fed funds futures market data at this point. So the takeaway from this segment is, hey, rates are lower. Great if you're buying a home. If you've got a mortgage, that starts with the number 7 or high 6s, you need to be looking at it. We'd love to help you with that and really lay out your options for you. All right. I know you've got some other stories to share, both on the refi and purchase side of things. I've got some pre-approval stories to share. I also got the MLS numbers, home sales in southeastern Wisconsin. We'll get to that when we come back. Information, stories, and advice from the front lines of home buying, selling, and financing. This is the Accunet Mortgage and Realty Show. Welcome back. And so, David, I've got the first estimate of numbers for August home sales in the 5-county Milwaukee metropolitan area, according to the Multiple Listing Service, of which I'm a card-carrying member through Accunet Realty Advisors. So August is an interesting month, kind of the end of summer. And so we've got roughly flat in terms of number of closed sales, according to the MLS number. Again,
compared to last year.
Compared to last year. And so we had 1,691 closed sales this year 19 fewer than last year. I think by the time agents and brokerages fill in the rest of the information, maybe it'll be a little higher.
Sure.
Because we're only 4 days into the new month. The median sales price, by the way, was up 5.7% or $20,000 from a year earlier. We're at $370,000, which is a blended number for condos and single-family detached homes. But here's the difference between this August and previous Augusts. There were 257 fewer listings in August of this year compared to 2024, which is a 12% decrease. Now, year to date, we're still a little ahead on listings, but that was kind of a jarring difference. There were 1,943 new listings came on the market, which is more than the 1,691 in closed sales. So, but again, a lot less than compared to a year earlier. What do you make of that? Any anecdotal buzz from the front lines?
I don't, and I would have to make some phone calls to some agents
to say, hey, does that feel like there's fewer listings out there? Anyway, but that's kind of a significant. That's of note.
Well, it could be. What if it's a double whammy? It's rates have come down a little bit, so now buyers feel like they have a little more elbow room, right? And there's fewer puppies for sale at the house puppy store.
Oh, so that's going to increase competition.
Suddenly competition is going to become more fierce.
Yeah, could be. When you look at that thing of number of months supply, where 0 to 3 months is considered a seller's market, 4 to 6 months is considered a neutral market, and 6 and over is considered a buyer's market. Good old Milwaukee, we have a 2.15 months of supply. There are 3,637 active listings, single-family detached and condos in the 5-county Milwaukee area. So you divide that by the 1,691 sales, and you get a 2.1 month supply, which is decidedly a seller's market.
Yeah.
So you can ignore all those headlines, like we say almost every week, that say, ooh, it's a seller's market and there's record inventory. Not where we live.
Interesting. Because when I look at the Accunet factory and the reports that I stare at all the time, we've had a resurgence in home buyers getting pre-approved to get out there and go look. And these aren't just people refreshing their pre-approval. These are
new.
These are a whole new, hello, we're interested in going and buying a home.
So the other data point of note that I like to track is the percentage of closed sales over asking.
Yeah.
In this August was 49%, and that compares with 54% a year earlier. So a reduction. By the way, if you look back to August of 2023, it was 59% of people paid over asking. So a little cooling off by that measurement. Yeah. Of course, what you don't know is, hey, were home sellers more aggressive in where they listed?
Yeah.
This August, and therefore people weren't willing to pay more than the high price they were already asking, but still a measurement that points to, okay, maybe there's a little less appetite for, I don't know. What do you make of that?
One version of what you're describing is that I note every home is a market unto itself.
That's true.
And
every neighborhood, because people aren't looking throughout the whole 5-county area at both condos and single-family detached. They're narrowing it in a lot more than that. Yeah.
Well, yeah.
And it has to do with how special the property was. I had a situation this week, a referral from a friend of mine, his son, looking to buy a very special property in Waukesha County.
Special because of the
unique
acreage,
location, the size of the lot, all these things. And so it was like, okay, he worked for a bank and he had gotten pre-approved by that bank, but it was contingent on the sale of his home.
What had they documented, Dad, in that bank pre-approval?
You know what? I didn't ask.
Okay.
Because
Are you breathing? Yes.
Right.
Here's a pre-approval.
So, he dutifully uploaded the income and asset documentation, and luckily the dad is willing to significantly help with a large gift.
Great.
And he's not afraid of the annual gift limit. right, which is $19,000
Whoa.
per parent per child. He's like, yeah, I'm aware.
Or
He's an accountant.
How's about the lifetime exemption?
It's like 22
too?
million or something like that,
Yeah.
isn't it? No, and that's
Yeah, between two people anyway.
right. So he wasn't afraid to give, a very, very substantial gift to help make
Great.
this happen. And so we got things teed up so that he could write an offer. And this all comes down to, hey, what is the maximum loan
Not
amount?
contingent on the sale
Not
of his
contingent
home.
on the sale of his existing house.
I will marry you just as soon as I break up with my other house.
Yeah, that's not going to work for a property that's, going to be attractive.
I would imagine other people find this property attractive as well,
Well,
right?
I'll give you that information in a second.
Yeah.
So it so happened in this case, and by the way, you know what? We have some 7-year adjustable rate mortgage money. That's where the interest rate is fixed for 7 years.
Yeah.
And then adjusts every 6 months after that. And that he was interested in that.
Over a 30-year amortization.
Over a 30-year amortization, right? And he was interested in that type of loan because we could offer him a 5.75 initial rate at which we could qualify him, which also helped in terms of carrying
sure.
the burden of both homes. So we're using that tool in our quiver. The bottom line, though, is, and by the way, he would have had to pay off a car loan to qualify because
Fine.
When it comes to getting rid of monthly payment, because what we're trying to do is, hey, can you handle the burden of both mortgages and taxes and insurance at the same time?
On both houses,
On
if
both
you own them
houses, right.
at the same time.
And luckily, we didn't have to try to extract any equity because the dad was going to come with a hefty gift to help with the down payment.
Great.
And
That's what dads are for.
there you go. Right. So bottom line, though, is we got this all teed up. And when he went to look at the house, the layout was so old and they would had to have spent so much money.
The layout was
Yeah,
old,
the
like
floor plan.
choppy.
Okay.
Okay.
You know what? I didn't ask for the details of what he meant. But he called me Friday morning and said, we're not going to pursue this particular property, which is fine. But now
He has an engagement ring in his pocket when that next beautiful house walks in.
That's right. And a bit of a game plan. So, but you got to, if you're going to bid and you think it's going to be competitive, you can't go in there with a sale of home contingency. And so we were able to find a way to get it done.
Well, and I'm sure
with the help of the dad.
Did his agent look at him earlier in the process and be like, you can't you want to be competitive? Well, you can't have this home sale contingency on your contract. You can.
You can,
But
you just
you
won't
are
get
worse
accepted.
than last place
Yeah.
at that
Oh,
point.
if there's no other offers, maybe they'll accept it.
Maybe.
Right.
They might wait for somebody. Thank you for proposing to me. I'm going to see if anybody else walks into the bar before I say yes to you.
All right, what do you want to talk to after this next short break?
I have a couple accepted offers this week for clients. Just want to narrate how they got to the accepted offer and then the problem solving that we did once they had the accepted offer. But we're still on track to get to the closing table. So I'll cover that after this quick break. You're listening to the Accunet Mortgage and Realty Show.
Accunet Mortgage is an equal housing lender. NMLS ID 255368.
After writing 3 unsuccessful offers, Brenda decided to make a no-regrets offer on this next property. She offered $35,000 over asking and promised to complete the purchase even if the appraised value came in as much as $25,000 below the accepted offer price. Why? Because she was tired of losing, and because her Accunet loan consultant showed her that even in her worst-case scenario, no additional money would be needed at closing, and her payment, which on this home was much more affordable than others she wrote offers on, would only increase by $17 a month. Brenda's no-regrets offer, backed up by a rock-solid guaranteed pre-approval from Accunet, was accepted over several others. And wouldn't you know, the appraised value came in at the significantly higher than asking purchase price, which happens 9 out of 10 times in our experience. If you or someone you know wants help understanding what a no-regrets pre-approval might look like, get started by clicking on the blue button at Accunet.com. That's ACCUNET.com. Information, stories, and advice from the front lines of home buying, selling, and financing. This is the Accunet Mortgage and Realty Show.
Welcome back to the Accunet Mortgage and Realty Show. I'm David. That's Brian over there. Dad, people, Accunet clients, getting out there, getting accepted offers. And this week, I had one client who got the accepted offer that weekend and then was notified on the next Tuesday, your job is being terminated. You'll be receiving 1 year of severance.
Oh, boy. And I bet the first question is, can I qualify using my severance?
Well, and I kind of beat them to the punch a little bit because I laid out for them. So my client is retirement age.
Oh.
And so maybe they didn't call it, terminate. It's early retire. Congratulations. You are retired.
Okay.
And I had, it was me narrating a little bit of the no man's land that we would find ourselves in terms of income, right? Because I shared with the client, I cannot point to a job that you won't have by the time you're making the first payment on this.
Even if we know that you're not going to have the job, even if the termination wasn't going to happen until after, we still can't. Once we have knowledge that income is going away.
Well, that, and every mortgage lender picks up the phone a day or two before closing and says, hey, is Susie still at XYZ Corporation?
Yeah.
And when the HR person says, yes, but her last day will be November 1st.
That's a problem.
Please stop.
Stop the presses.
So I said, I can't use that income to qualify for the borrowed money. And the client was in problem-solving mode.
Right.
They were okay.
What can we do?
And
they're 59 and a half or older.
Correct. But I also said, well, you haven't started taking the pension yet. You haven't started taking Social Security yet. Don't want to. And I can't use your severance pay.
Right.
The money is in real life.
In real life,
are you going to have money? Are you going to get this for the next year and then segue smoothly into retirement? Yes. But I can't use that. I can't use severance if it lasts for a year. An underwriter is saying, well, what happens at month 13?
Yeah. So does he have a little pouch of magic beans?
Yes. And so that is what we reached for, was turning the pile of money called a retirement account
hopefully
into
an IRA, right?
Yes,
okay.
into retirement income.
Right.
And we take, congratulations, you have $1 million. Divide by 36 months, and with the help of your financial advisor and or actually taking the funds into your checking account.
Yep, we got to set up the monthly withdrawals.
We can turn that $1 million into income on a mortgage application like you are drawing a W-2, working a corporate job.
That is the bag of magic beans.
And it's right that's if you had a bad mortgage carpenter, I would have looked at, well, I can't use the job you're losing. I can't use the retirement income you don't have yet. A bad mortgage carpenter would just shrug and say, good luck to you.
Yeah.
But thankfully, we have this tool in our toolkit called retirement income.
Yeah, IRA income in particular, which is better than 401k, because then you got to document what the plan specifications were and all that sort of stuff. So IRA, money that you completely control, is the best bag of magic beans. If you're over 59 and a half, doesn't work if you're 58.
No. Well, I even, on a more human note, I did ask him, I was like, do you still want to buy the house?
Yeah.
Because I'm going to be okay.
Right.
If you don't buy this house. Accunet's going to be okay.
Well, sure.
But if you take this haymaker in life, the surprise of losing a pretty well-paying job with early-ish retirement.
Yep.
Maybe that, I would expect some of my clients would have been like, well, we're
not going to do that.
We're going to wait.
What's their situation? Do they own a home now? Or
They do.
Okay, so they're going to...
They own a home. They're buying the new one for life reasons, and they'll end up selling the old home. They'll clear a nice chunk of change. So in real life, if I was to make a list of people who I'm not worried about, it's them.
Yeah. And are they... do they have other assets that they're using for down payment?
They
so
do.
we didn't have to do a bridge loan.
Nope.
Nothing like that. All right. Well, that's kind of clean. And then are they going to do a principal?
Clean because we are good carpenters.
Yeah.
It could be unclean if you had the wrong practitioner working on this.
Are they planning perhaps to make a principal reduction after they?
So funny you ask. My client was like, I don't think so. I think I'm going to give this money. I'm either going to sit on it, maybe give some or all of it to my financial advisor, see what they can do.
Proceeds from the sale of the home. Yeah.
Right. I was like, do you listen to Brian Wickert's Private Thoughts and public podcast? Because that is the definition of banking.
Yeah.
Borrow at 599.
Oh, that's what he's getting, 599. Nice.
Possibly.
Okay.
He's thinking about what he wants to do. Borrow at 599 in his case, and go tell yourself or your financial advisor or robot, go get me a rate of return that's greater than that.
All right. So that's a.
Although he also, I think, likes the liquidity as well, right?
Sure,
Because once you plow it into the house, it's like,
Yep.
congratulations. It's a house is like a savings account that has no door.
Yeah. Well, a big lock on it.
Right. And
Only
so
way
once
to-
it's in there, great. It's real. It's in there. It's just kind of tough to get at.
Yep. All
So
right.
that
So
was
what's your other story?
My other story is another retired couple
Wow.
purchasing an investment property
Ooh.
here in southeastern Wisconsin. They're out west. And their story, I'm actually same IRA income game plan.
Okay.
But the more real, conversation that we had was balancing down payment versus retaining cash on hand.
Yeah.
Because they're buying a fixer-upper.
Oh boy.
Like, it's perfectly fine. There's nothing
It's not
wrong
gonna-
with
okay,
it.
Yeah, we're not going to have condition issues from a lending standpoint, but it needs some love.
And so they're going to do a 20% down payment
Whoa.
on an investment property,
Single family?
single family.
Okay.
And I showed them, I was like, you do get a break on rate as you get to 25% down, as you
Yeah.
get to 30% down.
Right.
But for them, they're mindful of, well, we know that this home needs some love.
Yeah, so we need some money left over after our down payment.
Exactly. And they've got it. And it's just that the cash, they were able to look past what I would describe as the nominal difference in interest rates, depending on down payment.
Yeah.
Some clients really
focus
focus
on the rate, yeah.
on the rate, when really it's like, well, yeah, congratulations, you got 3/8 better in rate, and that's going to save you tens of dollars. It's not really tens of dollars,
Yeah.
but a near immaterial amount. But
Now you got to find some other money to do
Exactly.
the repairs. Okay, so that's an unusual situation. I would say that's
well, but they're looking at it in more
just
long term.
out of town, buying an investment property.
They have a 262 cell phone number.
Oh, okay.
Still. So they're
Okay.
originally Milwaukee people.
Gotcha. And did you consider being able to use rental income from the property via the appraisal? Or
I am.
You are. Okay. So we got to get the appraiser to say what's the fair market rent on that, and we can use that 75% of it
Yes.
as an additional source of income.
And that just takes the edge off of what I might need them to set up for new IRA income.
Right.
But every little, bit helps. Especially if, depending on the way things line up, if they actually need to, take the funds from the IRA,
Right.
to limit the amount that they have to take is just being mindful of other people's money.
Yeah. And just as another point of interest, while we do now require that people set up monthly withdrawals in order to use that IRA income to qualify, do they have to keep doing that after we close?
I'm going to answer that a specific way. After you buy the house, it's America.
Yeah.
And you can do whatever you want after you buy the house.
Right. But we do have to have that set up with the custodian. We have to document that in
Yeah.
order to be able to count that IRA income now.
My two other clients this week, just home buyer stories, appraisal waiver on a 15% down payment.
Whoa.
Which
Nice.
is awesome. Again, bringing certainty to a seller.
Just a point of information. I read a memo this week. They're now calling that value acceptance instead of appraisal waiver.
Okay.
The Fannie Mae and Freddie Mac. They're changing the nomenclature. The computer gave it a value acceptance.
We agree that this is the value of the home. Is it
Yeah.
really? What do you care? The computer said yes, and you were willing to pay
Yeah,
for it.
you can avoid the cost, the $525 cost of the appraisal.
Not just the cost, the risk.
That's
too.
right.
So that, and then another client appraisal waiver, just like all the things, is like rock solid appraisal waiver, 14 calendar day closing.
Oh my God! So you knew in advance on the second story, you ran it through the computer system so that they could write the offer.
I put it on the
And
pre-approval
you
letter.
put it on the pre-approval, highlight it in yellow, bold, no appraisal required.
Yes,
That's powerful.
And 14-day closing. I was stress-free. I was like, everything's documented. We don't need an appraisal. It's going to be lickety-split getting to the close. I'm going to be ready after 4 days, not 14,
Yeah,
4,
That's awesome.
because we are using all of the pre-planning
Right.
to both get the seller to say yes and make it very boring for the buyer to get to the closing table.
Did they have to offer over asking or?
They right at the list price.
Right at the list price. Okay, so they're one of the people that, because everything else is so strong.
Yeah. Which, for this on the North Shore, it was like, well, was it priced frothy to begin with? I don't know.
Well, the computer believed it was priced okay.
Yes, but in relation, as Daniel Kahneman would say, in relation to what?
Yeah.
So, people getting into the end zone, well, or at least getting on the football field, driving to the end zone.
There
Here
you
at
go.
Accunet Mortgage.
Absolutely. All right, so rates are lower, which is good.
Yep.
That's not a bad thing. It's going to help people.
Yes.
Might drive more competition. So, again, you need to put your best competitive foot forward. We'd love to help you do that. And, of course, all you got to do is click on the blue button at Accunet.com to either get started with a refi, because we think we're better at crafting that than most people as well, or a rock-solid guaranteed pre-approval to buy. Anything else, David?
That's all I got for now. We'll keep doing it. Go Pack. What's the spread for Sunday?
I don't
haven't
know.
even looked. Okay.
But we'll see you back here next week.
Bye for now.